Hello friends, I'm super excited to be back making videos again. I've sorted out all the security issues. I have a new PC with much quieter fans, so I think you'll notice a significant increase in sound quality, save the noises from the street because I live in a very central apartment, so there are a lot of cars around, and I think that'll seep through occasionally, maybe a siren. Anyway, so I did a poll yesterday on Twitter where I had you guys vote on what video would be most beneficial, and the overwhelming majority were interested in knowing how I pick my coins to day trade, how I decide what coins are of interest and what coins to ignore entirely. When I'm asked this question on Twitter, I tell people most of the process, 80 to 90%, is just looking at volume and volatility. So in this video, I'm going to go more in depth into 1, how I do it, and 2, why. I feel it's very important to understand the why in trading, to not just use things like, say, RSI or moving averages, even support and resistance. You need to understand in depth why the things do what they do, and that gives you a lot more future potential to gain mastery over these things. For example, if you understand that a support level is not just a support level, but it's a area of demand where a bunch of people are buying, and the psychological implications of it, it adds a lot more future potential to take yourself from just a robot who follows a system to someone who knows why he follows his system and how he follows his system. Okay, enough rambling. I'm gonna jump into the video now. First off, let's start with volatility, guys. We need volatility, obviously, as day traders, because we trade the intraday movements, and the coins which are moving the most will give us the most opportunities and the largest opportunities. So to find the most volatile coins, you just find 24-hour change on whatever market you're trading, BNB, BTC, Ether, USDT, your choice, and click on it. So this will do lowest to highest. This will do highest to lowest. So we want highest always, because in Binance you can only long. So only being able to long means uptrends generally are a lot more profitable than downtrends. So when you have your most volatile coins in order, you need to remember that there are no set good or bad values, save a lower cap. So I'll explain the second bit in a second. First, relativity means that if the most volatile coin is 10%, then anything between 6 to 10% suddenly becomes a very good choice. However, if the most volatile coin is 40%, then the 30 to 40% volatility coins become the ones of interest. That's what I mean by relativity. The other factor, where I mentioned the lower cap, means that if a coin is, say, let's go down here, less than 2%, I'd say less than 3.5% even, your opportunities become limited by transaction costs. Sorry, not transaction costs, by exchange fees. Because when we're trading very small movements, 1 to 10% normally as day traders, we need coins which are moving enough for us to not get destroyed by fees. I find on Binance, 1% is the minimum I would go for on an order, as to not be completely destroyed by fees. So set 3.5% as your lower bound for volatility. After that, you want to be looking for the highest coins, the highest volatility coins, and arranging the rest in terms of how much you want to trade them by relative volatility. Okay, so that's all I want to say on volatility right now. Let's talk about how to choose between these coins which ones you want to trade. when you have multiple 7% here, to know which is the best, go over to volume. So right now we can see the uncontested highest 24-hour volume is on Bitcoin Cash by it's 13,206 Bitcoin. That is extremely high volume and more than enough for the average Twitter trader, more than enough for myself to have all their orders filled, not suffer any liquidity issues, and not suffer long periods of sideways consolidation. I'm going to explain each of these points. First off, volume provides liquidity. So if you're trading, say, let's look at NeoGas. You have 4% volume here. 4% volatility here. Volume and volatility, they sound so similar, so I keep accidentally confusing them. Apologies if I've said the wrong ones in this video. Hopefully it was obvious when I said them which one I meant. Okay, so volatility at 4%, but volume at 95 BTC. Okay, so say you have a larger portfolio, not even that large, 50 to 100K. Say your portfolio size is 50 to 100K, and one of your orders is 10 BTC. Well, you alone have taken up nearly 10% of the market. Your technical analysis is going to be extremely unreliable if one of your orders practically moves the market. That's why you need to trade volume relative to your portfolio size. So the larger your positions you're going to place, the larger your portfolio, the higher volume need to look for. I personally, as a bare minimum, like a $10 million USD equivalent value, which would be about just over 1.5K BTC 24-hour volume. Personally on Binance, I've been playing with only 2,000 BTC volume and above, with sufficient volatility as well. So yeah, that's the liquidity aspect. The other is speed. So I have found with higher volume coins, the market decides things a lot quicker because there are more participants. So when you're trading, when you get into a big position for a coin with, say, 328 BTC 24-hour volume, you could be stuck in that position for a long time with the market going sideways and not deciding what it wants to do. However, when you have a lot more participants, you have a lot more momentum, the shifts, the movements, the swings, they happen a lot more quickly, and that gives you better ROI on your time. One thing I value hugely when I trade is the time invested, because I don't trade full time. I, in fact, trade kind of part-time as a secondary source of income. So I want to be in and out of positions extremely quickly with minimum time investment. Having an efficient process for shifting through coins of interest is key for efficient time utilization. So now you guys know how to use volatility and volume. Let's go on to the next step. So here, before I do, coins which interest me instantly are Bitcoin Cash. We've got 18.05%, over 13,000 volume. This would be immediately my number one coin because nothing even comes close to it on volume. My large orders would get filled up very quickly. I wouldn't even consider the other coins. Of the others, only ADA would be, Cardano, I don't know why I said ADA, would be interesting because 4.27% is sufficient volatility, and so is that much volume for someone would say less than 10K in their portfolio. Now, as someone with less than 10K in their portfolio, we've now found two coins which interest us. How would we decide between them? I would, first off, open a chart of the coin. So I'd go to TradingView and look at Bitcoin Cash, what it's been doing and where it is. Remember, on Binance, we can only go long. So the strength of the uptrend is extremely important. One, I like to look at the strength of the uptrend, and two, I like to look at how much the historic supports have been tested, because as you guys know, the more the support is tested and supports are areas of demand, the lower the supply goes, and therefore the weaker the area of demand becomes. Sorry, the lower the demand goes. Misspoke. So because of that, untested supports are very attractive, as are strong uptrends. There are a multitude of ways you can figure this out. You can draw your support zones and see if they've been touched recently, go onto lower time frames, say the 1 hour, and immediately see a support zone here. I see a weaker support zone over here, hasn't been touched. Oh, that could be an interesting play. However, I found the best indicator for me to figure this out, and this is a little secret tip of mine, is the Fibonacci EMAs. So first off, search for this indicator, Fibonacci, just finding it. Here we are. Just search Fibonacci EMA, and there's this great indicator over here by Patrick.kd, thank you Patrick, that has all my favorite Fibonacci exponential moving averages in one, and it gives us a great view of not only the strength of our uptrend, but also how much our supports have been tested. I've never done a tutorial on moving averages. I definitely need to do one, but I'm sure you guys know that moving averages act as supports, and they also resistances. Not only that, but they show a strength of an uptrend by how much they fan out. As you guys can see, look over here at the start. You can see these fanning out, spreading, as the up move is very strong here. Over here, as we move up quickly, again, they fan out further. Over here, the more we move up, the more they fan out. So by making sure these are spaced apart and fanned out, we can spot a strong uptrend. And by seeing that since here, it hasn't tested the 13 tick exponential moving average, we can see that, this is an interesting coin. We have had no recent tests of even the 8 tick moving average. This is an extremely good coin to trade. However, if it had had a lot of interaction with these moving averages, tested them multiple times, that takes away from our opportunities. So yeah, guys, this is how I see if the specific coin itself, which has its volume and volatility, is suitable on Binance. Draw the exponential moving average, see how much it's interacted with it. You can look at multiple time frames to see which ones show what you need to. So if you look here on the 4 hour, we can see that it hasn't been tested, but we're not really trading on the 4 hour, are we? We can look at the 15 minute. We can see a lot of tests, and still only one touch on the 21-day moving average. I've told you guys I like to use multiple time frames, but I've given you the basic tools: volume, volatility, and then hit up the exponential moving averages to see which coins have those strong uptrends and untested supports, which you can buy into and make your quick scalp plays. Alright guys, I'm going to end the video there. I hope it was helpful, and yeah,